In my recent conversations with business owners and industry advisors, a common theme that keeps coming up is the question of a meaningful sell-side quality of earnings before entering an auction process. Today, we have Ryan Irby, founder of Traders Oak Capital Advisors, an independent M&A advisory firm providing transaction support services to investors and business owners. Ryan, can you tell us why you feel it's prudent to conduct a QOE prior to approaching the market as a seller?
Sure can. So the first thing I'd say is it's all about sharper investor perception. Doing a sell-side QOE really preemptively communicates a transparent and thorough depiction of adjusted EBITDA and overall financial positioning to the market. So what it does is it not only gives potential investors a higher degree of confidence in a potential process, but it's also going to enhance the overall perception of your business in the market, and it demonstrates a transparency and a committed desire to transact.
While engaging a firm to perform a QOE can be an additive cost initially, we've seen it benefit sellers when it comes to the buyer's diligence period. Can you provide some insight on key points that can drive value?
Sure. So the first thing I'd say is strategic decision support. So when you go through a sell-side QE, you're going to be armed with accurate and reliable financial information before the process. And decision makers such as investment bankers, CFOs, and even the seller themselves and the management of the company themselves you can chart a course for success with greater precision by knowing the potential risks that lie ahead before they become critical issues. So the sell-side QB is going to empower leadership to make informed strategic choices, optimize resources, and mitigate potential risks. Additionally, it allows sellers and their teams to get a head start on the potential buy-side process, which can be very daunting if you're unprepared. And you can enjoy an increased level of support as you all work together toward the common goal, which is a successful close. So you can essentially think of a sell-side QB as a relatively inexpensive insurance policy when compared to the overall value it can provide in a potential transaction. The other thing I say is additionally performing a sell-side QB pre-market gives a seller a chance to highlight certain relevant adjustments to EBITDA that might have otherwise gone unnoticed in the process, such as personal expenses, business interruptions, or other unusual items that could potentially be helpful for interested buyers to be aware of. So, in other words, it gives the market a head start on some of the potential issues or add backs that might be present.
As we prepare companies to sell, we try to uncover any issues that might be a delay or impede the process. Can you walk us through what you've seen in past instances where a QE can benefit a buyer as much as the seller in the transaction?
Sure. So what it does, the first thing I'd say is it allows for an enhanced precision in terms of valuation. So a sell-side QB can translate into more precise valuation by strengthening the basis of the information that's provided. So this is a key factor in attracting quality investors and buyers. It's going to drive an increased enterprise value, and it expedites time to close by maintaining momentum throughout the process. In other words, with a solid set of beginning financials, there's just a lot more time spent on the actual meat of the transaction rather than getting to some financials you can actually work with. So buyers are going to know more, or they should know more about a potential issue entering a process, and therefore be more prepared to understand and accommodate these issues rather than walk away out of concern or confusion or just general kind of unknowing things. Also, having this information earlier can serve to potentially transform the buyer's level of effort and diligence from exploratory to more confirmatory, which can lead to lower transaction costs and a shorter time to close.
Thanks. It's helpful. As bankers, we continue to see value-engaging firms like yours to expedite and streamline a sell-side process. In addition to giving comfort to the seller that all their financials are in order, we've seen it benefit buyers in the event that they are considering using leverage to finance the deal as well. Any last thoughts that you'd want to leave with someone that's considering and contemplating the sell-side QOE?
Yeah, absolutely. I mean, it all really boils down to having more firepower on your side. Having more firepower on your side in a transaction is never a bad idea. If you're a business owner considering a transaction, an investment banker in need of additional support, a potential buyer with a promising LOI, or you just have questions in general, do not hesitate to reach out.
Thank you, Ryan. Appreciate your time today and the insight, and look forward to catching up in the future.
Thank you very much for having me.